And after more than doubling over the last 2 years and marking its biggest gains since the 1979 oil crisis this year, gold is forecast to glitter again in 2026.
And we decode those bets and reasons for a gold boost in this next report. Take a look.
Having never hit $3,000 an ounce before March this year, gold surged to a record high of $4,381 this year. For next year, top Wall Street banks see the yellow metal shine further. Analysts from JP Morgan to Bank of America and Goldman Sachs now predict that bullion will reach $5,000 in 2026. That is largely due to an expanding investor pool. Other variables like US policy uncertainty and bets for geopolitical crisis to continue into the new year have also boosted gold bets. The precious metal has gained about 64% this year, reaching multiple new milestones. Usually, such a performance would have meant forecasts or a big correction, but there are no predictions for gold to fall. At best, forecasts show the rally slowing in 2026, even with $5,000 in sight. Investors' gold holdings as a percentage of total assets under management have increased to 2.8% from 1.5% before 2022. While that is elevated, it is not necessarily a ceiling. Morgan Stanley and Goldman Sachs predict that an ounce of gold costs more than $4,500 by mid-2026. JP Morgan forecasts it at over $5,000 by the end of 2026, lining up the bets of consultancy firm Metals Focus. Apart from central banks and investors fueling gold's demand, new players included corporate treasurers and stablecoin issuer Tether. That pattern is set to continue next year. Analysts predict that central banks will continue to diversify their reserves away from dollar-denominated assets in 2026, which should support gold prices. Gregory Scherer, head of base and precious metals strategy at JP Morgan, said, "The price level is supported much higher than where you started because you get the central bank demand coming through." He added, "And then all of a sudden we're sitting above $4,000 in a much cleaner environment from a positioning perspective, which then allows the cycle to continue going forward." According to Michael Widmer, a strategist at BofA, the yellow metal will be boosted by US debt amid widening fiscal deficits and a weak currency policy pushing buyers to diversify their holdings. According to Metals Focus Managing Director Philip Newman, additional support could come from concerns about the independence of the US Federal Reserve, tariff issues and geopolitics, which includes the conflict in Ukraine and Russia's relations with NATO nations in Europe. However, the simultaneous gains in gold and stocks are unprecedented in the last 50 years. That has prompted concerns about a possible bubble in both markets. Business Bureau WION, World is One.